One called a strong market rebound that failed to heal all wounds. All right, so this is the S&P 500. It is at another all-time high, 0.5% gain. It is in non-stop mode once again. You can see typical pattern. It didn't want to spend any time below this 50-day moving average, and the buyers have just taken over ever since. You can't get more bullish than that. All right, next up, Nasdaq. The Nasdaq, well, it's also on a streak, not quite as strong as the S&P 500. You can see for most of this week it's been bobbing up and down right at the all-time high, but still looks good. 0.1% gain today. All right, the small caps, IWM, what can you say? It's just in a big trading range. It just won't get the energy to break out, it looks like. All right, next up we have the Volatility Index. Let's look at that. Just churning around. This is actually one thing to be concerned about if you're bullish. This hanging around is sort of setting up a base for the next pop. That's what's happened in the past, as you can see here. As I've said before, I can't get really bullish on the market even with the strong price action until the Volatility Index just craters down even lower to new lows. All right, let's move on to the currency market. The Australian dollar versus the Japanese yen. It is looking like it's stabilizing a little bit here. Not much of a signal, so I'll just call it neutral for now in terms of indicating risk sentiment in the markets. Let's move on to the individual charts. Okay, we have Boise Cascade. This is the paper and lumber company, and it looks like it's formed a base here, and it's challenging the 20-day moving average. So I'm keeping an eye on this. I haven't yet bought it. I was really hoping for it to get down to the 200-day moving average down here, but who knows what will happen next. Just keeping an eye on it. As I mentioned with Corning, I already sold it right around here. The stock now is in churn mode. Let's see what happens. If it can break above this 20-day moving average, that's the dashed line there, it could be a free shot all the way to 50-day moving average resistance. I probably won't buy such a breakout, but it's something to watch. Caterpillar, this was a disappointing trade this week. I rushed in to buy a put option on Friday on this big long down bar, and CAT has just churned for this entire week. Doesn't look like this will pay off one bit. But still, CAT doesn't look great. It's got this declining 20-day moving average and the declining 50-day moving average. So I'm still bearish on this one. Corn. In my post, I said I wouldn't buy it unless it tested the 200-day moving average. Buy back again, I should say, unless it tested this 50-day moving average or burst above the 50-day moving average. And sure enough, it just zipped up here. It hit for a 6.7% gain and moved so fast, I didn't have time to chase this, so I'm back in watching mode for corn. Allegheny Technologies Incorporated, specialty materials company. It still looks like it's in trouble to me. It's in a pattern here that's kind of churning. The sellers did follow through on this big long 6.3% loss last Friday, but they haven't been able to make any more progress net. So another one to watch. It's going to be a theme here. KB Homes. I said that this post earnings reaction was bearish, but I reviewed the conference call transcripts posted on Seeking Alpha, and the results seem pretty good to me. So I'm actually not surprised that it's now breaking up above the 200-day moving average, and based on my trading rules, this is a buy. I just need to see a confirmation with some more buying pressure up here. And I'll have no choice well, I do have a choice, but I will want to buy in, even though the seasonal housing trade is essentially, seasonal trade on home builders is essentially over. As a quick bonus, I did jump into Lennar. I couldn't resist. The stock burst above its 50-day moving average. I bought a call spread. I think it's a 101 to 106 over the next 2 weeks. So this is good momentum, and this breakout is on decent volume. So Lennar's results were also good. I read that transcript, and I wish I just had time to post up a summary, so you'll just have to trust me until I can post the summary there. All right, let's move on. Financials. Financials, it's teasing right here below the 50-day moving average resistance, and now the 20-day moving average has converged on top of that. So this is a tight squeeze. It's very bullish if it can break up above here, and of course it's bearish if it's bearish again if it breaks down below the low of the week. In between there is no man's land, and there's nothing to trade. All right, next up we have this company that I recently found, Celsius Holdings. It had a dip today of 4.4%. And like I said, I'm giving it some latitude, so I'm just chilling out in a position there. As a reminder, this is one that I bought more shares in after it conquered the price point for the secondary stock offering. All right, Etsy. This trade worked out really well. At the beginning of the week, I went ahead and sold my call option and thinking that was pretty good, and Etsy just zipped even more. So it's down today 3.1%. So it looks like it's losing a little bit of steam. This is still in a bullish position, so it's buy the dips from here. Next up, Carmax. Carmax is following through on its great post-earnings pop last week. I haven't yet seen an entry point because I don't like to buy anything that's just right along this Bollinger Band, which is this black line that's just too close for comfort for me. So instead, I like this to settle out, maybe consolidate horizontally, or even dip a little bit towards a 50-day moving average. Otherwise, again, I'm just watching. All right, Granite Construction Incorporated, as everyone should know, the politicians are hemming and hawing and trying to get a deal done on infrastructure. It looked good for a hot minute last Friday, and then things sort of looked shakier, and the stocks are showing that. Granite Construction Incorporated, GVA, is one of the better charts left in this group, so I'm just keeping an eye on this. Technically it's a breakout because of this move on Friday, even though it faded sharply, so that's a little suspicious. If it can close above 43, then I think the trade is back on. Of course, this is a stock that doesn't move much at all, so expectations are pretty low. Logitech is still just dribbling away. No quite entry here. As a reminder, I'm looking to see if there's an opportunity to buy a bounce off of the 50-day moving average, but looks like that trade is still in development for a while. Lululemon, or Lululemon, as I like to say, Athletica. This one's just churning, so just something to watch. Buy the dips and don't chase it, because over here to the left you can see there's an all-time high that's waiting to provide a cap and resistance. All right, Match Group. Match Group is finally cooling off after this super hot streak here. This again is a buy on the dips given the bullish move. That was a breakout of the 50-day moving average. I think this is last week. This was June 17th, so 2 weeks ago. All right, next up, Nike. Nike was the big surprise. Last week after earnings, it gapped up 15.5% to a new all-time high. And you can see here that the buyers and sellers are kind of going back and forth. So if the patterns hold up after today's nice 2.3% gain, it should be cooling off a little bit. So Nike is just in what I like to call full bull mode. This is no joke. I don't know where a good entry is in here. If you want to buy a small dip and see how far it can still go, I think that's probably the trade. And I would stop out below the candle from today's intraday low. Next up, Sally Beauty Holdings, SBH. I went ahead and bought this one after it dipped a little bit here, and so far so good. With the analyst upgrade, I'm thinking this is a good one to eventually churn its way above last week's high and then challenge this all-time high. But this is a slow mover, so I expect it to take some time for this trade to develop. Tesla. Oh, I wanted to pull the trigger so much this week because Tesla returned into bullish mode as of last week's breakout, but of course the stock is not cooperating and it's just churning around. So I have not put back in a trade. This is a tricky one now because of this churn. You either want to buy it on the breakout above this churn, which is going to be a tight call because 700 is a psychologically important number, but also that breakout will take the stock above the upper Bollinger Band, which of course could then mean that the stock is a little bit stretched. So my preference for entry is a fill of this gap here, or even better, a retest of support at the 50-day moving average, the red line. Even better if all three of these major averages are converging, and that would be a magical spot to buy or to place an entry point, because that support should be solid if Tesla is indeed back into bullish mode. Next up, Twitter. Don't worry, we're almost done here. Twitter, another common theme, just been churning this week, so I haven't touched it yet. Not sure what to make of what Twitter's doing here. Trying to chase it on a breakout above here, again, will be a tight exercise given the resistance here at the April highs. So what can I say? If it comes back down to 20-day moving average, it would be much more attractive to me as a swing trade. Finally, Uber. Uber was a surprise pick in my bullish column last week with this 50-day moving average breakout, but as you can see, Uber has disappointed for this entire week. No confirmation of the breakout. A confirmation is a follow through on the previous move, and this would be a higher close. So the buyers just could not get it done. However, if you want to be proactive, notice this converging support at the 20-day moving average, 200-day moving average, and the 50-day moving average. That looks pretty solid. In fact, if you want to be aggressive and just buy here, I could see someone making a case as long as you stop out below this candle here. The intraday low was 49.71. All right, that's all I have for today. Thanks for joining in. I went a little bit long, but I had a lot of charts from last week. Until the next time, check out my blog at drduru.com/122, all letters, and be safe and happy trading out there.